Hello, everyone. Welcome to the third episode of our podcast, just talking about investments specifically for your 401k here at Creek Carrier. I'm Caitlin Moore. I work at Union Bank and Trust, and I am the educator for your 401k. Union Bank holds your retirement plan with Crete, and I am your point person for any questions that you have, but I can't always answer them. So I have with me Joe Recker. He is an investment officer at Union Bank. He's been with the bank for about 9 years. He works in retirement services. He is a great asset to ask the hard questions to and kind of explain things a little bit better than anyone that I have asked so far. So I've learned so much from Joe over the years that I have been there. So I brought him on our episodes to kind of explain through investments as a whole, funds, various questions that we've received. So if you haven't listened to the other 2 episodes. But today we're going to be talking specifically about target date funds. So we're talking about target date funds within your 401k. What are they, how they work, and pros and cons of them. So let's just start with this question. Thank you for being here,
Yeah,
Joe. Appreciate it.
Good to be here.
What is a target date fund?
Yeah, I mean, kind of the high level, what's a target date fund? It's a portfolio built by a fund company. In the Creek Carrier plan, it's the Vanguard target date funds, and it's essentially it's managed based on people's age.
Okay.
So you'll see different vintages. It's and the target date funds you'll see like 2020 fund, 2030 fund. That's just corresponds to roughly the age that you're going to retire. And then Vanguard they build a portfolio based on that age, and then each of these funds has a glide path. What that means, that glide path, as you get closer to retirement, it's gonna get more conservative. And what that means is they're gonna reduce that equity exposure, and they're gonna shift that more towards fixed income.
Okay.
It's kind of less volatile investments, maybe that generate income.
Okay, let's break this down a little bit because you brought up 3 different points. So I want to break those down a little bit more for some understanding. So target date is an investment. It's an entire portfolio, U.S. stock, international bonds, and cash towards the end of your career. It is broken down by your age. So the younger you are, Vanguard in particular, who we're working with, believes that the younger you are, the more invested in the stock market you could be. So they're going to make it more aggressive.
Yep.
Aggressive meaning we're getting in the stock market. The older you are, closer to retirement, we're going to get more conservative.
Yep.
Okay. Everything is set up by age. So there's dates with it. You'll see it on your account. 2020, 2070, 2050. Those are the years closest when you turn 65.
Yep.
So that's kind of Vanguard's philosophy around this is the younger you are, more money we're going to put into the stock market. Older you are, let's taper that back. Let's get into bonds and cash. But we're looking at years closest to when you return 65. That's the basics of that target date fund.
Yep. That's
and you could choose
how to choose the correct one. Yep.
Yes. So the correct one. Can you choose outside of your age range?
Sure. Yeah. I mean, if you want to be more aggressive, then pick one that is a little bit further out. Higher date on there.
Mm-hmm.
If you want to be more conservative, then pick one that's a little closer to the year. Then you'll get a different portfolio depending on which one you pick.
Sure. And once that's chosen, it's really supposed to be your one and only, right? Why is that important to really understand the philosophy behind these target date funds? Because you're allowed to choose a target date fund and other mutual funds, bonds, more than that. But what's the point of this one and done?
Yeah. So what Vanguard, their philosophy is you don't have, like you said, you don't have to, but that you would put most of your portfolio or all of your dollars into that target date fund because it is that fully diversified portfolio with that glide path, and if you're taking part of your money and putting it, in a different type of investment, then you might not, have the right mix based on what they recommend.
Okay. I always tell people I use Vanguard target dates as my skeleton. If they want to go outside of the target dates, Vanguard's giving a really good suggestion on how your portfolio should be allocated as far as how much U.S. stock, how much international. It can vary, but especially because it's a 5-year glide path there. But I like to use them as the skeleton because they're the experts in the game, right? And they're saying certain ages should have certain allocations.
Yeah, and it's based on decades of research of that. They've studied participants and what is your best chance for success investing, and then that's how they've built these target date funds, the underlying investments, and then how they've built that glide path.
Yeah. So, for instance, my specific target date right now is a 2050. So 90% of my money that I put in every pay period goes into the stock market, both U.S. and international. If I were to choose my 2050 fund, but then go and pick a couple of mutual funds to add on a little bit more, what is that basically doing to my account?
It's you theoretically you're getting more diversification, I guess. So that's one thing. But
isn't always a bad thing.
Yeah, that's the thing is you have to decide is that appropriate for you to add more whatever
Aggressive funds.
small cap or international
Right.
or whatever, is that appropriate for you? Because Vanguard, like I said, how they've built it, they don't think they've built it a certain way because they think that's the best. That's your best chance for success. But it's not exactly built for everybody. It's not customized for everybody. So there are situations where it does make sense to diversify outside of that.
But essentially, I'm just over diversifying.
You could be,
according to Vanguard, if their outline or their skeleton is to say that. So it's not always. It's not the wrong thing. It's just kind of, if we understand the basics around these target date funds, as your set it and forget it, one and only. Then you don't have to choose other ones. Vanguard's going to do all the work for you with these target date funds. And
they're definitely designed to just be a one-stop shop. That's the only fund. That's the only fund you have to use. Yeah. If that's what you want to do.
You can move out of that at any point. But I like to tell people it's a great way to start until you do your homework.
For sure.
Because it is being invested really well, and it's very diverse. So it's a great way to start if you don't know what you're doing yet or trying to learn things like that. But it's also like I said, set it and forget it. You could work at CREEP for the rest of your career, set up your target date fund and never touch it again. It is meant to be a start to finish kind of situation where they're rebalancing, making sure the right amount is being invested in the right place, things like that.
Exactly. They're just, like we've said it probably a couple of times. It's kind of a one-stop shop, set it and forget it option. That's, it's good for a large majority of participants.
Yeah, because it's also built specifically for retirement, right?
That's
what they are. It's for long-term planning,
exactly.
Long periods of time where you don't have to worry about anything. So. Besides being a one and done type of situation, what are some other perks of the target date funds?
I mean, one is specifically talking about the Vanguard option in the CREEP plan is fees. That it's a really low cost option. The investments inside of it are all going to be index funds. So, those are all low cost, and then
as we learned about in episode 1, 2.
Was that episode 1? I can't remember which episode.
We do go into cost of index funds versus regular ones.
Yeah. So there's the cost is a benefit. That glide path is a benefit where Vanguard's doing that because some people they don't look at their investments every quarter or every year, and then like you mentioned earlier, Vanguard will do that rebalancing for you. It kind of just does everything kind of for you.
Yeah. So even for the cost ratio, it's low, but it's managed and
they're
doing
the
all
glide path. Yeah, the glide path and all the rebalancing is all managed by Vanguard, and they do all that research for you.
I'm not sure how much we went into the glide path, but that just means that earlier in your career, you're going to be pretty aggressive, pretty much in the market. By the retirement, you're not, but they taper that off over the years. So they're getting less and less in the market on your behalf, moving that over to bonds. So you don't actually have to worry about that, right? Like set it, forget it. And by the time you retire, you're at about 45% in the market?
The final landing point in the Vanguard is 30% equity, 70% bond. And then 7 years past your target date, then they actually transfer that into what's called the retirement income fund, and so that's where you'll get that 70% bond portfolio and 30% equity.
So real conservative later on into your retirement.
Yeah, that's designed for somebody that's been retired for at least 7 years.
Okay. Like we said, you could choose whatever you want if you want to. If you want to be in that income fund in your 20s.
If If you want
More
to
than
be
welcome.
conservative, yep, you can
But your earning
definitely
potential-
utilize that. But
Earning potential.
if you want to go with what Vanguard recommends, that's not
that skeleton
their
there.
recommendation.
Yeah, exactly. So we have the target date funds. We've got so many other options within the CREIT account here. There's no right or wrong answer to investing, as we've established. Really just want to look at your age, do some homework, ask the right people the right questions, get both sides of the angle there. Target dates are a really great way to start if you don't know what you're doing yet, don't have time, maybe just don't want to look into it. Because retirement investing, again, we're not day trading. So it's like you said, not everybody looks at it a whole lot. And even if you are, you're not going to want to trade out your funds a lot. So target dates are so great for that idea of just let it go. Hands off approach. Just let this roll in the 40 years that I'm working, and then, retire. Having let the experts do all the investing for you. So if you do have more questions about target dates, feel free to give me a call. I really appreciate Joe helping me out with these podcasts just about funds just in general with CREIT Carrier. So thank you for helping us out to understand a little bit more. Like I said, I'm Caitlin. I work at Union Bank and Trust, but we hold your 401k with CREIT. So if you have more questions, I am your point person. So feel free to reach out. But appreciate your time. Feel free to float me some more questions if you do have them, and join us on future podcasts or webinars that we're going to have in the future. So thanks so much.